I'm gonna have to explain that again because it wasn't recording. All right. So again, let's see here. Perfect. Jacqueline, I didn't see you say one, but if you didn't, let me know what's your mind on this. How you feeling? Perfect, perfect. Furman, how you feel with that? So you were
Good, good.
so the conversation we were having earlier, right?
Huh?
You say you identified a fake out, and then on the retest of that fake out, you decided to enter the trade, right? Very modestly with a small lot size. And once you saw that the trade made its move, right? When it started showing you signs of a reversal coming back up, you took partial profits and you held the rest of that trade, right? So overall, if that was the scenario here, right? Very similar scenario. So I'm going to go over what we were just talking about. If in the case where we speak about scenarios and situations, right? We spoke a lot about market structure. We spoke about channels, trends, right? We spoke about how the market sets itself up. Whoa. Sorry, guys. So we see that the market was setting itself up. Where is Kurt's home? Right here. So here we seen that the market was previously trending upwards, right? So again, we're gonna talk trader's mindset, right? If this was me looking at the charts and none of this had happened yet, right? None of this has happened yet. Let me delete all this. And this is what the market currently looks like. Okay? When the market set itself up, right? 1 second. When the market was setting itself up, the first thing I did was look at what the market previously did. So the market has been trending, right? I was able to identify the 3 touches to the trend. So I understand that I am approaching the end of the trend, right? Because 3 touches confirmed it. And on the 4th touch, we know that the market will either reverse or continue going up. So what happened here? The market made a push outside of the zone that you see here. The market had twice trouble breaking above. So we've seen that the market created a tweezer top, right? And on top of that, we have a tweezer top. We have an engulfing candle, right? And after the market engulfed into that zone, right? We saw that once the market closed like that, I was looking to take my sell. So I told you guys that my goal to take this trade was I had 2 choices. I could have taken my trade from the entry I took to the last touch of that trend, or I can take it to where the market actually went ahead and created the second touch where it confirmed the start of that uptrend, right? I mentioned the first one, but I said that it's, unless the world is ending, I don't see the market dropping 500 pips within 8 hours, unless it's like something major, right? Something like Brexit is not going to happen and, the prime minister is going to jail or something like. Unless something crazy like that happens, we do not expect a big move like that. So I'm being realistic with myself. I'm looking for a trade for the day or for a few days, right? So as the market set itself up, after the closure of that engulfing candle, I'm sorry, guys. I'm not going to say it again.
No, we're going to get you.
Okay, quietly. I'm working right now, okay? Okay. So after the closure of that engulfing candle, we seen that the opportunity to take this trade for a sell. So I took my sell, right? I mentioned 2 scenarios. I could have waited for the consolidation to finish after that engulfing, right? And once the market made that move, right, I could have taken that trade to the downside. And then even though the market came and retested that, I'm sorry, guys. Give me 1 second. My apologies, guys. And my little sister is sleeping over. But overall, right, we see that the market approached the final zone right here, right? The final touch of the trend. So once the market went ahead and consolidated above that the third touch, right? We understand why. We spoke about market structure. And when we were talking about market structure, we understood that 3 touches confirmed the trend. And on the third touch, we're identifying the support of that trend, right? Of that last touch. So when the market breaks it on the 4th time and revisits it, or it approaches that price point, we understand that if it fails to break below and retest that, if it stays above, that there's a potential of a move to the upside. So what are we seeing here? Here's the uptrend, right? Here's the third touch. Here's the support of that. Instead, I drew the price area of it, the demand zone, right? So when the market was unable to break that, the consolidation occurred. The market made one more move to the upside to do what? Retest the breakout that occurred here, okay? So once that happened there, and I saw that the market was unable to create a higher high in that sense, all I simply would do is take that trade again, add another sell to that. When I was talking about when I entered my sell here, right? I said, although the market started to make its move, as I saw that it approached the third touch of that trend, when I was looking to place my stop loss, if the market was still too close to where I would usually put my stop loss in front of my entry, worst case scenario is I will make sure that I'll have a stop loss, or I will not let the market go beyond the highest price of this candle or the opening price of that candle. Okay? So although the market can try to make a move up, I know that if it stays above that price or below that price and it doesn't fake out of the zone again, then that will still be considered a retest of the market, and we can still see the market make its move down. Instead, what we see here is that the market came, retested the zone it broke out of, and then engulfed after the hangman pattern here and the engulfing candle. I could have taken that trade again, and I could have rode it to the second touch of the trend, which is where we see the price consolidate here before trying to make some further moves down. Overall, if I would have taken this trade from here to here, although each candle represents 4 hours, that trade right there with those 2 positions, had I had $1 lot each, right, from 2,500 all the way to 23, let's say 15, right, that's about 200 or 185 pips. 185 pips on $1 lot is $1,850, right? 2 of those positions, you made yourself $3,700 in less than 2 days. Type 1 if that makes sense. If you don't, please let me know where your question's at. So trader's mindset, right? Putting it together, putting it to understand what we want to do. So let's say my name is Joe. Joe is new to trading. Joe invested $1,000 in an account. Joe's not going to get into trading on his very first trade, right, with $1 lot. He's going to be moderate. He's going to put a 5 cent, 10 cent, because the goal is to build confidence here, right? So once I have confluence and I'm able to put together my thought together, I'm understanding what happened in the past, what's currently happening, and what happens after. I back it up with the previous 2 questions I asked myself there. So again, you notice on this trade here, I was able to use simple things, right? Market structure. I was able to use the fact that the price was unable to break back above after the fake out here. On top of that, I confirmed it with using the candlestick patterns and also using price action. Remember when we spoke about price action, our goal was to take into consideration, right, that on a retest, which was what we discussed yesterday, what specifically are we looking for, right? If we don't understand in terms of how many buyers or sellers there are, what we're looking for is the confirmation of that engulfing candle, that pattern, that formation, right? Anybody who's looking at the chart here, right, if they actually paid attention overall to the whole structure of the market, while we assessed all of this, there's that one person who would have been like, nah, that's a head and shoulders. I'm selling this shit. Here, fake out. The market came back and retested. I'm selling. Boom, I'm riding it to the second touch. Simple. Does that make sense? Type 1. Now I want to hear back from some of you guys. Let's see. Dean, talk to me, man.
I just know that that's what I get stuck in, doing what you were talking about, the head and shoulders, not looking at the whole picture.
Yeah, and it happens to everybody, you understand? But the whole point is that we're not just saying, ooh, you know, look at the head and shoulders. Let me give the market my money. No, we're like, you know, Pedro in our school, Pedro always tells me, when you enter a trade, right? He says he enters his trade and with so much confidence, he doesn't even have to look at the market again because he knows it will hit his target. And if the market takes his money, he understood what he risked. So if I was entering my trade, right, I had so much respect for my analysis that there was no way in hell, although if I take a loss, it was a calculated loss. That makes sense? And Angel, I mean, short term in the sense, I wouldn't say short term, it's just a strategy to put together what we've learned so far, right? Understanding how to spot an opportunity. If I were looking at the market based off of, you know, what we've spoken about. We've really spoken about very, very basic things, right? Market structure. We spoke about the trends and the channels. We spoke about how to identify the trends, right? Understanding the laws and the rules of a trend, right? We understand the candlestick patterns and what they mean, right? When they happen at support or resistance or supply and demand. We understand that candlestick patterns are either just 1, 2, or 3 candlesticks next to each other. Candlestick formations, right? Group of them. So kind of like what we've seen here with this head and shoulders. So if you want to take a longer term approach, right, you can just look at the higher time frames and trade off of that. You know, everybody has a different personality, and you know, there's people who are, you know, they can do this every day in and day out, look for their setup and get out. There's some people who, you know, and we all go through it. They make a shit ton of money in one day, the next day they give it back, and then for 2 weeks they're trying to figure out what they're doing wrong. You know, everyone goes to that. But in the end, if this is the strategy that makes the most sense for you, just run with it and just continue making the adjustments. Hemi, why don't you share with them kind of like your adjustments you've made, right? How you went from trying to scalp the market to now you've built the comfortability to take a trade and see the long-term movement, right? You would always tell me, man, I want to be able to hold this for the bigger move, right? What was the difference for you?
I'd say understanding the market structure and where, you know, having a plan to where it's going to go was pretty hard at first, actually, to hold. I used to just go, I'll find the turn right at the top. I'll get in, maybe take 20 or 30 pips and miss out on about 500-600. But yeah, I guess it was after doing all the one-on-one stuff, once you understand the possibilities and where things are going to go, it's just backing yourself to trust your analysis pretty much, which just comes with time and confidence. Like you said, just putting in those feelers and just let them run.
Yeah, you know, and that's what goes back to what my suggestion is. Like, if you're someone who needs to develop the confidence in this, you know, like some people here, you know, someone like, let me see, like someone conservative as Jose Gonzalez, you know, like although he sees it clearly, he's sticking to his plan, right? What's the plan? 0.05. I'm not trading nothing above or lower than 0.05 until I prove to myself that I'm willing to trade at a higher risk, right? And I proved my point. So then when he does that, he ups his lot size. Someone like, you know, Kelvin is a bit more aggressive, right? Kelvin would take a trade. He'll take $100, flip it to $700, and he's trading that $700 like it's 700,000. I'm messing with you, bro.
Nah, it's a fact. And then I fuck around, put the wrong trade in.
And then it's gone.
Out of life. You learn, yeah.
And then what happens? Because of that one mistake, it wasn't the trade, it was your management of the money.
Yes.
You're questioning yourself if you really understand this. You understand? And that's what the market is developed as. So I want to make sure that everyone on here is on page. Randy, your question in regards to the time frames. We're gonna talk about that. See, today's Tuesday. So in 2 days, we'll talk about understanding which time frames we're looking at for what. And place to get a demo account to practice. At the end of this, I'll walk everybody through that wants to open up a demo account, right? Let's see. Angel, you have any questions? Why don't you let me know what was your biggest takeaway from doing your homework? While Angel's typing, does anybody have any questions in regards to what I discussed, right? I gave you guys a scenario of, you know, how I look at the market with what we've learned so far. So if you do have a question, just unmute yourself real quick. Let me know what your question is, and I want to answer it, because what we're going to talk about next, right, is when the market is trending up or down, we're going to actually learn what points of that move to the upside we're in. Calvin, I saw you unmuted yourself. Talk to me.
I was gonna ask to see if you could. I sent a screenshot of my chart on gold on XAU. So I'm trying to see if you see the same thing.
Give me 1 second.
I sent it in there. Yeah, it's right there. Because what's been getting me, like yesterday, bro, I just feel like I enter at right before I'm supposed to.
Right now, gold is moving a little low, Kita, because the
dollars look like it's moving up.
Dollar's gaining strength because of the optimism behind the trade war.
Yeah.
Just to kind of give you a sense of my thinking, Donald Trump's getting nervous in regards to like them like moving further with his impeachment, because you know his agenda is he wants to come back into office. So for him right now, he's trying to like earn points as opposed to continue hurting his political agenda. So for him, he thinks right now he's pushed it far enough to the point where, you know, he can get what he wants, or at least reason with what they're willing to agree to, but kind of save his ass at the same time. So, you know, gold is the safe haven. Gold
always, man.
So when the dollar, when no one trusts the dollar, everybody moves their money to gold.
Yeah.
So,
it's like with SPX. I've been trading SPX, and it's paid well. And then there's other times where this shit will spike crazy. That happened to me.
The S&P 500 has 500 companies. So
yeah, it's like top 500 companies. So there's times, man, like last week I was doing well. I had like a good 5 trades go my way, and I'm excited. And I can't tell you, bro, in a matter of a minute, it spiked it was like a whole percent in a minute, and it knocked me out.
Hey, that's where you gotta protect yourself, bro. Once you're in
that's all it is. Because I feel like when like all the things you were explaining, like I see those things now. Like I'm finally able to look at a chart and start seeing these things without having to like really like look at it for too long. Like I'm starting to spot those head and shoulders, the pennants, right, the flags, all those things.
Mm-hmm. Just use it as confirmation. Pair it up with each other. Okay, look, market retested, here in gold, right? If my thinking was right, there's times where we see the opportunity and the market was trending up. So I see that on top of the market failing to, creating such a long wick here, when the market was unable to break below the trend here, the next candle that stayed above engulfed the previous candle. So I would have taken a buy for that, right? And I would have understood that in order for it to continue going any higher, right, I needed to understand, correct. And I also needed to understand what the previous market structure was. So if the market was, yeah, correct. If the market was dropping, right, and this is the price that the market needs to stay above, right? Once the market broke above here and stayed here and this engulfing candle kicked in, all I had to do was look left. Look at all the consolidation that occurred in this price here.
And it also retested at that top of that trend too.
Right.
Gotcha.
Mm-hmm. And the first giveaway here, hangman, then a shooting star, then a bearish engulfing, then another shooting star. You see that? Hella confirmations. Most people were trying to buy this here. They got caught. The retest replayed, and then.
Gotcha. And right back to the price it started from. You made a new low.
Correct.
Gotcha.
But keep working, man.
Thank you.
Let's see. Jeff, what's up, Jeff? How you feeling?
Doing all right, bud.
Why don't you tell me your biggest takeaway for today?
Honestly, I'm getting a little better understanding of like your market structure kind of stuff.
Mm-hmm.
Instead of just working on candles and just spotting the one formation, now you understand what's going on from the past trends and what's going on with future trends, stuff like that.
Mm-hmm. And overall, when you were doing your homework, what would you say was the most?
I don't have a homework there.
Oh, you didn't do homework?
No, I just got it.
Class, man. Get out.
I know. I just got it.
Let's see. Talk to me. What from yesterday's class, what resonated with you the most on the breakouts and fake outs and the retested areas and how we looked at those candles there? Which one stood out to you the most?
Well, yeah, I mean, just what I was talking about when we worked on yesterday. You showed me that downward trend, and then it retested back and came back. And then I saw using market structure, if you looked back, the whole thing made a whole lot of sense. And then rather than, I mean, the example you used before was just like, hey, look, there's a head and shoulders pattern. Why don't you just take the downtrend trend here? But then actually, like, if you applied all the other knowledge, the whole thing makes a lot more sense.
Correct. And that's what we're looking for here. Confluence, right? That's what I'm throughout this whole program, I'm going to stress that out to you guys. Confluence, confluence, confluence. Multiple confirmations. The more confirmations you have backing that up, guess what? The higher I can take, the higher risk I may be able to take on this trade because more and more shit back it up. As opposed to, oh, yeah, look, this is a big old shooting star pattern at resistance. And then the next candle engulfs to the upside and you had a $3 lot and your account is gone, you know? Confirming that you could have taken that with a 5-cent lot, and although the market went against you, right, you took a minimal loss as opposed to such a higher loss, right?
Yeah, I like what you did there with Kurt's stuff too, like just explaining out the thought process, like if you were to take a trade. I need some of that sometimes just to figure out what I'm doing.
Oh, no, of course. Again, that's why I wanted to incorporate that more in this program. After reading back some of the feedbacks from the previous students, a lot of them wish that outside of just focusing on understanding and identifying it, like really talk sense into like identifying that, right? Like if I was in that position and I seen that, what would I do? You know?
Yeah, good.
I'm gonna talk about the Elliot waves, and we're gonna implement that into our thought process as well. But Friday night, I'm thinking about not doing a class on Friday night and asking everybody to push their limits on Thursday so we can finish the course and really just focus on that. And then Saturday morning, I'm thinking about opening it up for everybody and just like kind of like gel it all together. So if this is a situation and I want everybody sharing their charts, right? If you participate in this, you're going to share your chart and you're going to look at scenarios with what we learned and be able to understand it. So at the end of today's program, because in reality, the Elliott waves is not as complicated. We're going to spend a lot more time, everybody's like simply identifying it. But I want you guys getting ready. I'm going to challenge you guys, all right? Yeah, this Thursday, correct. So does anybody have any questions in regards to what we've discussed? Jeffrey.
I'm good, bro.
Perfect. How did you feel with the examples and, you know, all the strategy we were talking about here? Talk to me.
It's good. I see it more now.
Where am I losing you?
Wait, can you hear me better now? Give me 1 minute. Let's see. Give me.
I hear
I
you.
don't.
You're fine now.
I don't have any questions at the moment. If anything arises, I'll let you know.
Perfect. If you do have, just make sure you type them up.
You got it.
Let's see. It's simply applying the knowledge gained over the week. It becomes simpler to apply the information once you understand how to break down the market. But I'll wait. I want to wait until. Yeah, no problem, bro. No problem. But I want you practicing your charts. All right. So make sure again, and I'm gonna say it again. I'll write it down for you guys. When we're looking at a chart, right? I need to have my zones in play. I'm talking about for me, and when I'm teaching you guys, you know, I do this for the living. You know, I'm teaching you guys how I'm able to structure myself. So I structure myself by, I automatically look for my zones. Once I look for my zones, I look for the previous structure. Once I understand the previous structure, I go on to see what the market is currently doing. Once I see what the market is currently doing, then I go looking for confirmation showing me what the market is going to do. Okay, so with those 3 questions we spoke about in the beginning of the school, we said what has happened, what is happening, and what happens after. If my goal is to trade what happened after, right? If my goal is to trade what is going to happen after what's happening now, then I need to find those confirmations. If I'm going to wait for what happens after to take that trade, right? I want to make sure that I have the confirmations after that move happens that backs up what I'm looking for, okay? So let's talk about Elliott waves, guys. Let's see. So when we were talking about downtrends and uptrends, we were talking about, 3 touches confirm the downtrend or the uptrend. 2 touches is the start of the trend. Right? And on the 4th touch, the market would either break it or, continue going up. So what we're going to talk about is the Elliott wave. The Elliott wave is a theory that this gentleman by the last name of Elliot, he's noticed that every time the market made a move to the upside or to the downside, it was in 5 phases. So for instance, if the market was moving up, he noticed that the market was moving up in 5 phases. So backing up what we spoke about with the 3 touches, when the market is moving up, I can see that the first touch is the first move. The second touch confirmed the start of that move. The third touch confirmed the trend. And then on the 4th touch, usually the market will break it, right? So what we're going to learn is that within a downtrend or uptrend, right, when the market is making its moves, we're understanding what point of that trend we're in. So when we're looking at an uptrend or a downtrend, right, there's 5 moves to the upside or downside. And we're going to understand what each one of these numbers mean, right? So here we have the first move to the downside. And as always, right? So if you guys are looking at this, you can kind of have an understanding what we're looking at. when we spoke about a breakout, right? Every breakout needs a retest, right? And in order for the market to continue pushing up higher, the market needs to break the previous high, right? And break out to the downside, retest, right? So let's talk about the first wave. Where we at? Don't worry, Jeff. I'll switch from the whiteboard. I got you. So here we have in the first wave, we're going to have that represented by the green line, right? And in the green line, we can see that that was the first move. So I'm going to give you guys a summary of each wave and what they mean, right? So wave one. Wave one is the initial move towards the direction of that trend. So if it's an uptrend, the first wave is the first move to the upside, right? This is when a few traders think that the market will go up and they start to buy, causing the market's price to go up, right? So then we have the blue line, which is the second wave. And this is when people start to take profit on those buys, causing the market to begin to fall, right? And they see that, you know, in the end, after they took profit, the market dropped a little bit. People saw that the market came back to retest the initial move to the upside. So once we have the retest of the breakout, people start to see on the third wave, this is when this is usually the strongest push up, because people start to realize that the market retested the price area or the price point, and that's confirming that the direction of the market is going up. And so people start buying more, creating a higher high. So once the market makes a move up like that, right, what happens now? The market has to come back and retest, right? So that's where the fourth wave comes in. So again, people start to take profit, causing the price to fall. Usually most people still hold the trade and they're actually buying that retest. So this is why after the third wave, when the fourth wave is created, this is the third touch of the trend, confirming that trend. If the third wave is not larger than the first wave, then I want you guys to write this down. The fifth wave will be the largest move to the upside. Again, if the third wave was not larger than the first wave, then the fifth wave to the upside, that last move after the third touch of the trend, is the strongest push to the upside. So JL, how do we verify that? How the hell am I gonna know if the move was higher? Just grab your tool, right? If the first move was a 20 pip move and the third wave was an 18 pip move, and we know after the retest, and we can expect the fifth wave to be greater than 18 pips, right? Because that's the extended move. So again, the third or the fifth wave are usually your strongest push up. If it's not the third, it's the fifth. If it is the third, then we know the fifth still has potential to outlap that third move, but we at least know that if the first move was 18 pips and the third wave was 25 pips, I don't want to go shooting for 55 pips on the fifth wave, right? When I already knew that the third wave made its biggest move already. So again, translating it. After the second touch of the trend, right, the market pushed up 25 pips. The market came back and created the third touch of the trend, right? So I'm not looking for from the fourth touch or the third touch to the fifth touch, to the fifth move to the upside, for that to be 60 pips, okay? I'm looking for less because I already know that the third wave was bigger than the first wave. So I'm testing my luck here, pushing for 30 pips from 4 to 5 if the market already outlapped the first move. Type 1 if that makes sense, guys. 0 if it doesn't. So when will it be that the market makes its move to the upside on that fifth wave and it's more pips than the third wave, right? we'll talk about that. That's actually how the market corrects itself. Okay, so Jackie, where you at?
I'm right here.
Perfect. So this is where, if on the fifth wave of that uptrend, right, the market starts to create a rising wedge, right? If the market created that rising wedge after that fifth wave, then that sometimes can be confused as the extended move. But all it is the market is correcting itself, but creating that rising wedge. And we understand that at the end of that wedge, which we'll understand how to identify it, right, that the reversal is coming. Does that make sense?
Yes.
So again, let's see who's paying attention. Randy, when the market makes its first move to the upside, right? When the market makes its first move to the upside, on the second wave, we can expect the market to do what?
To retest.
A retest, right? And the second wave will also be the what?
The second wave. That's still the same one, right? Number 2?
Yeah, just think of the trend, right? The second wave will be the second touch of that trend.
A fake up?
No.
I'm way off.
The second wave, it looks like a fake out here. I moved it by mistake. But the second wave is simply just the second touch of that trend.
Oh, yeah. Sorry.
All right?
Mm-hmm.
So how do we know? No problem, Angel. How do we know that the fifth wave will be the extended push to the upside, Randy? How do I know when that is the situation? That on that fifth move, on the last move to the upside, in that current trend, that's the extended move? How would I be able to identify that?
It all depend. It all do with the third.
Correct.
The
If the third, what?
The third wave. The pip is not as high. It's not what's it called. The pip is not as high as the first one.
Just simplify that for me. The third wave, as long as it's not a bigger move than the first move, then we know that
fifth
move, it would be.
Yes.
All right?
That's what I meant.
No, you're good, bro. You're new to this. Don't worry.
Thank you.
Doing a good job, though. Let's see. Daniel, what's up, Daniel?
Jose, how's it going, man?
Doing well. On the fourth wave of that trend, that would be considered the what?
Retest.
The retest, which creates the what touch of that trend?
Third touch.
The third touch. So while you answer that, while that's occurring, always make it a habit. While I'm looking at my trend, and I'm gonna mute you real quick, Daniel, sorry. While I'm looking at my trend, if I have my zones drawn out, right, I want to make sure that I automatically identify the support of the fourth wave so that after the fifth wave occurs, when the market tries to change the structure, I already know what price point or price area I'm looking for the market structure to change. Type 1 if that makes sense, guys. Perfect. So on a downtrend, the same thing, right? The first wave is the first move to the downside. The second wave is the retest, creating the second touch of the trend. The third wave, right? If the third wave is not greater than the first wave, I know that after the third touch of that trend, that fifth wave should be the extra push down. So I want you guys to pull up your charts. I'm gonna show you guys real quick how to identify your Elliott waves. Before you show me your chart, make sure you have your zones identified. Yeah, we'll talk about that in a second. But no, there's not more than 5 waves. But after the 5 waves, there's 3 different corrections we can see. So before you show me your chart, you better have your zones identified. I want to see zones. Let me pull up a chart here. USD CAD. Okay. Let's delete this. I want to see zones. We'll run through it real quick, and I'm going to pick 5 people to share their screen, all right? So we have the 3 zones that we always identify. And what I'm going to do is identify my Elliott wave. So if I go here on my submenu to the left, there's going to be an Elliott impulse wave. Okay? So the Elliott impulse wave. So I'm going to go 1, 2, 3, 4, 5. Okay? So you see here? 1, the first move down. Second, third, 4th, 5th. Okay, I'll show you guys another example. Here's an example to the upside. So if I looked at, let's say this was my price zone here, after the market retested and confirmed that the change of the structure occurred, right? Here's the downtrend. Here is my retested price. When the market made its move up, 1, 2, 3, 4, 5. Okay. Does anybody have any questions? Type 0. If you don't, type 1. Pull up your charts. I want to see the zones, and I want you guys using the Elliott wave tool to identify where in that trend the 5 waves occurred. I'm going to show you guys another example. So here is, so here's an example of when it happens in accumulation, right? So here's accumulation. Right? The market broke above the zone. Once it confirmed that, we have 1, 2, 3, 4, 5. Here's an example of when the third wave is greater than the first wave, right? The fifth wave is just a slighter push to the upside. Now, the question you asked me earlier, Dan, this is not just another wave. This is just the market correcting itself to the upside, creating that rising wedge we were talking about, okay? Let's see here. So, who do I want to pick on today? Jose Gonzalez, you're up first.
Sure thing, bro. So I was looking at Euro NCD, and I had set up my, well, you saw the homeworks. I had the chart neatly done and whatnot. And this, by the way, anybody who uses Windows, stop using that and switch to Macs. my computer updated.
Like, yo, real traders actually say the opposite.
I can't stand it, bro. So I'm gonna share what I got on.
Share your screen. I'm gonna get some more coffee.
Sure. So can you see my screen?
Yeah, I see it perfectly, bro.
Okay. So we had a nice bullish run with GJ last week. And I mean, I think it's pretty clear. We can see what's going on here.
Real quick, before I just realized I didn't add a very, very important note when it comes to the Elliott wave. Always start your Elliott wave identification, like understanding the first wave to the upside is not like the market just started dropping and then the market went up. Don't assume that that's the first wave. Wait for the market to break into a price area or price point. For instance, see here Jose's chart, right? How we went 1, 2, 3, 4, 5. That could be a perfect example. But see, most people would try just because the market dropped here that this is the first move and try to make that happen. Let the market confirm that if this was the price area consolidated, wait for the breakout and then the retest, and then actually do the first move from there. Second, you can see that the third move was higher. And then on the fifth move, it actually created a higher high. But go ahead.
You did it for me, bro.
But no. Explain the logic. Explain the logic.
So yeah, I mean, we had to identify our zones first, because that's the key there. Let's see. Can you guys still see me?
Yeah, we see you.
Okay. So you see how GJ is slowly breaking into the zone here, and then now it's above it, and now you have your retest. So here we go. Here's the 1, right? Breakout to the upside, very aggressive, some consolidation. Fourth wave, and there's your fifth. Well, technically this would be your fifth, because this is the biggest one. So let's fix this a little bit. I think that makes more sense here.
Bring that up to the higher move.
Hold on. Oh man, Windows.
No problem, D. Damn, I thought I heard an encore of clapping just now after you clicked on that.
So there you have it. I mean, this was all between Thursday and Friday of last week.
Put the 1 up here. That's the only correction I got there, but you're right. Because that was the first move to the upside. So it would be 1, 2. You want 1, 3, and 5 on top, and 2 and 4 at the support.
Mm-hmm.
No, you got it wrong there. The other way. Tú lo tenía bien. So it would be 0, 1, 2, 3, 4, 5. Because remember,
There you go.
2 and 4 are where the market people are taking profit. See?
Yep. There you go.
Perfect. Now I want you to do something. I want you to adjust your supply zone to where the third touches, right? And I want you to look left and see where the first and the third were, right? And what happened in the previous trend on those prices. So on my third touch, yep, when the market was going down, on the fourth, it was where the engulfing happened. And here, look at my sell entries. And when I was buying, you see that?
Mm-hmm.
You see how I'm able to use what happened in the past to confirm as the market is setting itself up.
Right.
That's why I was beating myself up on when I tried selling that trade right here on that candle. But
I'm actually selling now.
yeah, I got sales now too. But good job there, man. How are you feeling though overall? Like I know you're improving so much, bro. But how do you feel overall?
I feel great, man. Zones was the big thing. I mean, I still got a little bit of perfecting the zones, but I feel like I've gotten considerably better.
No, you
Like
definitely
every time we go over the course, man, something else sticks. And I remember something else.
100%. Well, I got you. Let me see. Does everybody have any questions in regards to what we've seen here, Jose's chart? If so, type 0. If you don't, type 1. And the next person up, I'm gonna pick on Bianca. Share your screen, Bianca. And the next person that goes after Bianca will be Jeffrey. You're on your phone, right? So you're not going to be able to share your screen?
Yeah, I'm on my phone. But wait, let me just send the link to my computer. I'm right next to my computer now.
All right. While you're doing that, no problem, Bianca. So I'll leave you for last. So you get some time. Jacqueline or Evelio, share your screen. Step up to the plate. Talk to me. I think you're muted. Hold on. Where you at? Hello?
Yeah.
Now I hear you. Talk to me. How you feeling?
Can you guys see the screen?
Yep.
Oh, okay. So yeah, this is what I picked. You know, I already have my song drawn out, and I already did it. If you want me to like take it off and then do it again.
No, it looks good. I want actually to point out something to you. So notice how we always practice identifying the 3 zones, right? So before the market traveled from the first zone, the demand zone, to the supply zone, the first wave to the upside actually confirmed our median zone.
Yeah. Mm-hmm.
You see that? So then what did the market do? Before it came, it continued going up. It actually retested above the resistance or the price area that was formed right around here.
The consolidation, yeah.
Correct. So that confirmed that the consolidation area and the previous downtrend, which this consolidation area is considered a accumulation price point, right?
Mm-hmm.
When the market finally got out of that, right? Look when the market made its move to the upside, where it actually started to consolidate above before making its 4th wave. So I wanted to show you this because in the importance of identifying the 3 zones, you were able to identify accumulation, the change in the trend, and not only that, when the market made its largest move to the upside, why it was, the 3rd wave was not bigger than the 1st wave.
Exactly, yeah. They were like almost the same.
Mm-hmm. Correct. So overall, how you feeling, man?
Oh, wonderful. Good.
What would be your biggest takeaway? I didn't get to ask you that earlier.
Of today's?
Today and yesterday.
Well, just overall the mindset, you know, how to put everything together is just really good. I mean, I'm getting it so clearly now.
Mm-hmm.
How the confluence of everything, you know, happens. I'm very excited about this.
Correct. Now I want you to identify for me
Mhm.
Let's tie in today's class with yesterday's class. I want you to identify for me on wave 4 and wave 5. I want you to tell me what candlestick pattern you see on wave 4 that showed you that the market was going to make its move up. And on wave 5, I want you to tell me what candlestick pattern you see that showed you the market was done moving up.
Okay, so in this one, let me put this a little bit more higher there. Sometimes you cannot see it too well. So in this one, you could see the hammer, the inverted hammer right here, follow up by the engulfing candle.
That signals what? When we have an engulfing candle like that on the retest of a breakout, what is that signaling to us?
The market is going upside.
Yeah, the buyers took control.
Buyers took control, yeah.
So when the market made its move up on the 5th wave, what pattern we seen there?
That it also retested also the ceiling, the resistance again, and then it was a twisted bottom, and then you get the engulfing huge candle afterwards.
You're gonna make me cry, bro. So proud. What is the most important part of that retest there? Why is that retest important?
Oh, because it broke out of that resistance.
Yeah, where the third wave was, right?
And the third wave, yeah, the third wave, it broke out of the resistance. So that's when you know if it's gonna go higher.
Correct. So on the 5th wave, I want you to point out to me the candlestick pattern and the candlestick formation that indicated the market was done going up.
Okay. I'm gonna have to put this a little bit forward because it went way up away from the third touch of the train. So if we put the train starting from here, should I make it from here or should I make it from the after the breakout, after the retest?
You can do it after the retest. Because the fake out wasn't confirmed after the retest anyways. It was confirmed after the retest, excuse me.
Yeah.
So your second wave and 4th wave are correct. Okay? But overall, what I want you to focus on is on the 5th wave, right? What do we have right here? Give me there's 2 candlestick patterns on that last wave. And then there's a candlestick formation.
Yeah.
So the candlestick formation is what? I'm going to help you out real quick so we can see it here. We have the push to the upside, the 3 inside down candle. You see it? Candles. The bearish engulfing candle. Right? And then we had a rising wedge after that.
Okay.
Right? So I'm going to keep you here. The reason why this is so important is because after the 5th wave, the first indication that we had, right, was that this is resistance.
Yeah, it's a consolidation right there.
Correct. So this consolidation area became a what now?
And another resistance.
A resistance area that turned into a distribution zone, right?
Okay, yeah.
Remember we were talking about distribution zones? So
Uh-huh.
after the move to the upside, correct. After the move to the upside, let's say I was waiting for this to finish. So I caught my trade to the upside, right? I caught my trade to the upside. I took profit. I understood that this was resistance. The very first sign of resistance here was after the market hit that price point, a huge engulfing candle came in. So that was the reaction, right? So I identified my first high. So if I remove this here and I identify my zones based off the high and then the previous high, then I'd be able to draw a zone from here to here and extend it. So it wasn't until, even though the market kept faking out, notice what candlestick patterns kept occurring at the fake out, right? At the fake out, I had a shooting star or a pin bar, then an engulfing candle to break back into the price zone, right? Then the market came again, shooting star, then an engulfing candle to break in the price zone. That's 3 confirmations right there showing us the market's not ready to continue going any higher.
Okay.
On the fourth one, we have another shooting star and then another engulfing candle. Then the next candle, doji, and another engulfing candle. Once that engulfing candle would have closed, I could have taken this trade for a sell. And if I were taking my sell, like we said earlier, from there to if this is the first touch, the third touch, and this was the second touch, then all I got to do is identify my price area there, which you already have, and I can take my trade from here to my zone here, and I'm a happy man.
Then I go home.
Well, we're probably just getting out of bed when we took that trade. No, but you know, I want you to understand that logic. Make sense?
Yes, a lot of sense.
Perfect. Does everybody understand that? Type 1. Jeffrey, yeah, I use a Mac.
I'm actually still doing it. Sorry about that. I'm using my iMac, and this is the first time I'm doing that. So I'm just following the instructions here on YouTube.
It's easy. Just go on zoom.us, download it, and when you download it, you enter the meeting ID. The meeting ID, when you're ready, I'll give it to you. Let's see. Jeff, how you feeling, brother? Does it make sense what we're talking about here with strategy?
Yeah. Oops, shoot. Yeah, I like it.
Perfect. Jacqueline?
Yes, it looks good.
Perfect. Bianca, how you feeling? Angel, talk to me. How you feeling? Perfect. Evelio, I'm gonna have Bianca share her screen. Give me 1 second. Let's see, Kurt, how you feeling, brother?
Yeah, all good here, bro.
Awesome. Let's see, Bianca, you can go start sharing. Randy, how you feeling, man?
Good. This the waves is giving me more confidence.
Yeah, and we're gonna go over in a second. Once everybody identifies the waves and shows me their charts, we're going to talk about after those wave occurs, how we identify the potential of a rising wedge, a falling wedge, or a consolidation.
Got it.
Let's see, Dean, how you feeling, brother? I don't know if he left, but Sharon, talk to me. No worries, no worries. So talk to me, Bianca. Can you unmute yourself?
Yes. If I go in and out, just let me know.
No stress, no stress.
Okay,
How you
so
feeling overall, though? Talk to me.
I feel okay. This one is a little bit easier to find than some of the other ones,
Okay.
but I mean, I just need some confirmations. And I think I recognize some candlestick patterns too, like within it and then after. So it's similar to the chart we just did.
Awesome. So this is USD CAD. All right. Your zones look good. So first things first. 1, 3, 5. All right. So you identified your channel here, correct? Explain to me what I'm looking at. Why don't you try to explain it to me?
Okay, so here's the wave.
Why
This
is
is,
that, why did you consider that your first wave to the upside?
well, this is the one that I recognize.
All right.
I was able to count it out versus me trying to force it into another ascending trend.
All right. Perfect.
So yeah, this is our first wave, and this is our first touch. Well, does this count if it's inside like this? If it's not necessarily all touching, like does this still count?
Yeah, I can count. Remember what we said. For me, I would have identified my first move to the upside after the retest into that zone. So my first wave would have been here, then the second, then the third, then the fourth, then the fifth. But you're not wrong. Because if you look at what you have here, right? Let me change my color here so we can see it. The market faked out here. It broke back in, right? And this was the first wave, second, third, fourth, right? And you went all the way up here. That leads us to another conversation we're going to have in a second. But I want to make sure that you're understanding it. Overall, you're right here.
Okay.
This right here is where a lot of people get lost.
Mm-hmm.
And this leads us to our next conversation. In each wave, I want you to understand this, Bianca. In each wave, on a smaller time frame, there's going to be 5 moves inside that one wave. Okay? So then on the second move, there's going to be 5 waves in that wave. Does that make sense?
Yes.
And then on the next wave, there's going to be another 5 waves on a smaller time frame. Okay? So if you see it here, from 3 to 4, we had 1, we had 2, we had 3, we had 4, and then we have 5. You see that? In that third to the fourth wave?
Yes.
So overall, I want you making it a habit to wait for the retest above the zone you're identifying here. Because see, the conflicted area here you'll have is that when the market created a slider lower low here, it kind of messed up your structure or could throw you off. So if you waited for this retest and then mark this as your first wave, this as your second, right? This as your third, this as your fourth, and then this as your fifth, you can see how after the fifth wave, we had 1, 2, 3, 4, 5 waves to the downside. See that?
Yes.
And then the market started consolidating here and then made its next move to the upside. So in the end, good job on this. I'm loving how your charts are starting to come out. How are you feeling overall when putting the information together?
Overall, I'm feeling better each day. I just gotta make sure that I'm practicing each time. Like I just have to practice on more than one time frame, more than one part.
So I'm gonna give you some suggestions here, right? I want you identifying your zones based off previous data. I don't want you just working on identifying the zones based off what's happening now. I want you focusing on identifying your zones from the past. So you see how you have your 2 green horizontal lines?
Yes.
I want that to represent a zone for you. So you can see here, when the market broke above and then couldn't hold price above, it came below. And then you can see here, after the market retested a few times, where the resistance met here. You see that?
Yes.
You could have been in this game here, entering here, taking it to here. Never created a lower. You could have taken it here, enter it here, get out, come back in, right? The market faked out, retested. I knew from here to here I could trade again. You see, and if you look at it, if you measure it, grab your ruler tool right here. Click on it and measure from here to here for me. So you would click, drag up, move it up. 50 pips, 60 pips. You could have been catching 60 pips in and out, in and out, in and out, in that range. And what would that range be considered? You remember the term?
The pattern?
No, not the pattern. The name of the consolidation area when it occurs at resistance.
It's either accumulation or the other one. Hold on.
Go on your cheat sheets. Go to your cheat sheet.
Distribution.
Yep. So distribution. What was one of the things I told you that when the market distributes or accumulates before it makes its move, what does it usually do?
It fakes out.
Right? So it faked out. You see the fake out up here?
Yes.
And then the market also gave you a head and shoulders pattern, right? On top of that, it gave you a big old engulfing candle that actually broke back into the zone and broke your demand zone. And right before the market dropped, retested and made a move down. Now, count those waves to the downside, right? This is the first move down. This is the second. This is the third. Third was larger than the first. On the fourth is the fifth. You see how we identify those waves?
Yes.
Perfect. How you feeling? You feeling good?
Yes.
You have any questions?
No. It's just during this distribution here, I thought, this was where it kind of broke out, but I realized you said it was up here.
Remember, distribution occurs on top. So zoom out. Zoom out so you can see the big picture of this. Yep. This is distribution on the top. Oh, sorry. Share your screen again. I'm by mistake unshared you. This is accumulation. This is distribution. That's why, remember, the cause of the move to the upside is from the accumulation. After the cause is the effect, which is the move to the upside, right? And then the cause before the market goes down is the distribution on the upside. So this was the move up before the market came back down, right? We had consolidation here. So consolidation at the bottom of a zone is considered accumulation. The consolidation on the top is considered distribution. Okay? But overall, everything's looking good. Keep working hard. If you have any questions, just make sure you type it in the box before we leave, all right?
Okay.
Perfect. Keep working hard. I'm proud of you.
Thank you.
Let's see. Jeffrey, you ready?
Sorry, just give me one moment.
While you're doing that.
Okay. So I click on join a meeting, right?
Mm-hmm.
And then what's the meeting ID?
978-948-2169.
All right. Let's see. Well,
just make sure you don't connect to the audio on your computer and just leave the audio on your phone connected so it doesn't create that that frequency. No stress. For those of you guys that are, I know it's getting late. I just saw the time. The homework is on those same charts that you guys identified the candlesticks on the retest. I want you identifying the Elliott waves on them. Tomorrow, before we move on to the next topic, I'll go over the corrective wave. So again, on those, make sure you have your zone, right? And then identify the waves of trends to the upside or downside. I want you identifying the waves, okay? So I use the Elliott wave tool and go ahead and identify them like that and submit it before class tomorrow. I'll submit a homework assignment example so you guys can look at it. But if you guys are gonna log off, I wish you guys a good night. And for those of you guys staying, I'll be staying here. You ready, Jeff?
Yeah, so I click on what? Share, I guess? Or are you going to take over from there?
Yeah, you got to share. I want to see, you got to show me what you're working with here.
All right, give me 1 minute. Let me see which I think is this one. Oh. No, this is not the one. Do you see it?
Mm-hmm. Close the one on your phone and use the audio on your computer. I guess I'm hearing feedback on the computer too.
So leave the one on the phone, all right.
Yeah, now I hear you good.
All right, can you hear me on this one?
Mm-hmm.
Huh?
Yeah, I hear you perfectly.
Okay.
So identify for me your Elliott waves. Where would you start your Elliott wave, and identify that for me?
So I broke the zone, so I would guess I would start here.
Remember, wait for the retest.
Oh. I'll delete those. So the retest was here.
Mm-hmm.
Is that accurate?
No, you want the retest to be the first move up. So it would be the first wave. Hold on, this is still white.
I removed that.
So this would be 1, this would be 2, this would be 3, right? 4, and then 5. And then that's when you have that correction wave, which we'll talk about tomorrow. So after the 5th wave, right, we'll be able to see that the market was unable to continue go any higher. So then that's when the next Elliott wave started.
So wait, how come this one was the first move?
Because this is faked out here. Why would we consider this the first move if this move to the upside is still not confirmed? Remember, we're waiting for the market to come back and retest that this is the zone. This is the price it's staying at. So once it stood there, that move to the upside was the first move. You understand that?
Oh, okay.
Because you see all this, don't move your screen real quick. You see here how the market shot up and there was a fake out and then it came back in and then it broke out and then it's here, this didn't retest. This faked out. This is where the market finally tapped the zone you drew. So none of this matters to me. It's what happened after that retest. That was my first wave. one, second wave, the third wave to the upside, right? We can even do this as the third wave. This 3, 4, and then 5. You see that?
Yeah, I see. Okay.
So then the market broke back in. I can do what? I can do this as my first wave, second, third, fourth, fifth, right? Or I can ignore all that, right? And just go with how we were doing it, right? One, wait, I have the eraser on still. 1, 2, 3, 4, 5. So 1, 2, 3, 4, 5. You see it?
Mm-hmm.
Here's the fourth wave, third, second, first, and the fifth. See how the market consolidated here and then started trying to make its move up?
Yeah.
How you feeling with that?
Okay. That's good. I got it.
Talk to me. I don't feel like you're confident in regards to it.
Well, to be quite honest, it's just like this part right here threw me off. I wrote it down on my notes. Give me one minute.
Say it again, you cut off.
No, you said that you start the Elliott wave when there's a breakout, but the breakout like around here, like this part, like on a downtrend, I get, but on the uptrend, I don't understand why this would be the break. Oh, okay.
What are we looking at? Are we looking at the line or the price or the zone?
The zone.
All right, so we identified the zone as where the first move above that zone, right?
Mm-hmm.
So here we have the market breaking above the zone.
Right.
Is this the retest? Is this the
Mm-hmm.
retest of the zone? Are those two the retest of the zone?
You had to fake out, yeah.
Yeah, but it's not a retest, right? A retest of a price area or price point, right? If this is the price area, right? The market has to break above it and retest.
Mm-hmm. Yeah, retest. Mm-hmm.
Right? So that's what I want you to focus on.
Oh, okay.
All this right here, this is just
Right there.
market faking out, not retesting, came up. They're making moves up, but what happened? The market came back down.
Mm-hmm. It did it retest. No.
And then that's the real move to the upside.
Oh, okay. Retested it. Yeah. Okay. Oh, I see. Got it. Okay. All right.
All right.
Ah, got it.
So grab your Elliott wave tool and mark it.
So it'll be here.
Mm-hmm. All right.
Mm-hmm.
How's that feel? Feels better? Makes sense?
Yeah.
Awesome. Does anybody
Yeah,
have questions? No problem, Jeffrey, always. Does anybody have any questions? Type 0. All right, let's see. All right, so why don't we end class for now? I'll see you guys tomorrow. We're going to talk about the corrective waves tomorrow, and then we'll get into understanding Fibonacci. All right, using Fibonacci to understand the retracement level or the price points of those retracement levels, and how to combine all that with what we've been learning to find further confluence. Okay, so I'll see you guys tomorrow. Homework must be turned in as always before 8, and I wish each and every one of you guys a great evening. Have a good
Good
night.
night.
Good night, Jose. Good night, everyone.
Good night, everyone.
Good night, everyone.